Hello and welcome to Crypto Invest TV. I'm your host, X8, and let's go ahead and just jump right on into it. So, Robinhood says 60% of its customers traded crypto in Q2, pulls 233 million of crypto revenue. Robinhood reported its first earnings as a public company, revealing that more new customers bought crypto than stock. In brief, Robinhood posted remarkable crypto growth in Q2. The company's CEO cited crypto as well as growing female users among its bright spots. The news was disclosed as a part of Robinhood's quarterly earnings report. Robinhood cited a large growth in the popularity of cryptocurrency on its platform, reporting today that more new users bought crypto with the first trades rather than stocks in the 3 months ending June 30th. The company also disclosed that more than 60% of its funded accounts engaged in crypto trading during this time. The news came in the form of the Q2 earnings report, which was Robinhood's first since it became a publicly traded company in July. The report disclosed that Robinhood lost 464 million during the second quarter of 2021, a large number but not indicative of the company's overall performance, since all of that loss came from an accounting adjustment related to a change in value of notes and warrants held by the company. Robinhood's revenues grew to 565 million in the second quarter of 2021, which was a 131% increase from the same quarter a year ago. Cryptocurrencies accounted for 233 million of that revenue, a huge increase compared to the 5 million in crypto revenue the company pulled during the second quarter of 2020. The crypto revenue in Q2 amounted to 41% of Robinhood's overall revenue compared to the 17% in Q1. Meanwhile, the meme-based Dogecoin accounted for a full 62% of the crypto revenue, nearly double the share it counted for in the first quarter. In both quarters, Robinhood listed reliance on Dogecoin revenue among the risks facing the company. For the 3 months ended June 30th, 2021, 41% of the total revenue was derived from transaction-based revenue earned from the cryptocurrency transactions compared to the 17% March 31st of earlier this year. We'll go down to where it says, in a statement, Robinhood's CEO Vlad Tenev pointed to strong growth in the company's crypto operations among the female users. We are encouraged by the number of people who are accessing the financial system for the first time through Robinhood. We're happy to expand access through products like commission-free crypto trading, which saw strong growth this quarter among women investors in particular, and IPO access, which gives customers an opportunity to invest in companies at their IPO price. The crypto growth is a bright spot for Robinhood, which suffered negative publicity surrounding the July public offering. The IPO was considered a flop after Robinhood fell below $38, the listing price on the opening day. Though the shares have since recovered and were trading around 50 on Wednesday afternoon, the price fell around 7% in the after hours after the company warned growth could slow. Robinhood has expanded in the operations in 2021 and is wildly rumored to be planning a standalone wallet to compete with rival Coinbase. I'd be really surprised to see that. Quite frankly, they've been talking about how, you know, they would have a wallet here for quite some time, and in all reality, if, you know, if they were really going to do that, then I think we would have seen it months ago. So that's just my my take on that. Just realistically speaking, all the other companies, you know, you know, they you know, they people, even standalone developers, like, I mean, just straight up individuals have been able to make predominantly safe crypto wallets in a time span that Robinhood has said that they would. So in all reality, I don't really think that it's ever going to happen. I think they're going to continue to keep it pretty much the way that it is. It's kind of just like how it is, like how it's one of the downsides for Uphold. You know, Uphold is really good, but it does have its issues as well, similar to that of Robinhood. We'll go ahead and move on into the next topic, which is Facebook's crypto wallet is ready for the market, but is the market ready for Novi? So Novi is the name of the app. I'm assuming that they're going to be holding with that they're going to be that they're producing. Facebook has been working on on crypto for years. Now it's getting ready to release its stablecoin wallet Novi. Facebook first announced its crypto project in June of 2019. Last year, it pivoted from plans of global currency to a U.S. stablecoin. Its wallet is nearing release. Facebook Diem co-creator David Marcus announced today that Novi, Facebook's long-gesting cryptocurrency wallet, is ready to come to the market. The pronouncement came at the end of a lengthy blog post rather than with the fanfare that accompanied Facebook's initial announcement back in June of 2019. That is, that it was creating a digital currency backed by a basket of fiat currencies and managed by some of the biggest names in finance and technology. Navi, originally Calibra, finds itself limping into a very different cryptocurrency market than the one that existed 2 years ago. Facebook's project began as Libra, a digital currency that could be sent via the Calibra wallet. The goal wasn't a stablecoin that mimicked the US dollar price. The goal was to create a new global currency, though the asset was to be managed at first by Libra Association members. Over time, it planned to decentralize, just as other crypto projects have done. Most of that is no longer true. In 2020, Libra shifted gears, aiming to become a traditional stablecoin instead of being the new Bitcoin. It would become a more regulated version of USDC or Tether. Calibra would become a stablecoin wallet, one integrated with the biggest social media network in the world, but a stablecoin wallet just the same. The following month, Calibra switched its name to Navi or Novi. In December, the Libra Association jettisoned its monarchy, oh my lord, in favor of Diem. Throughout the project has weathered a stem of departures, among them the co-founder Kevin Wheel. In a single day in October of 2019, eBay, MasterCard, Stripe, and Visa withdrew from the association in mass after Facebook faced tough questions from regulators. Still, major names including venture capital firm Anderson Horowitz, crypto exchange Coinbase, and ride-sharing app Uber and Lyft remained. When Facebook first floated Libra coin in 2019, after several years of rumors that it was working on it, Tether was the dominant stablecoin with a market cap of 3.5 billion. It is still number one, but its market cap is 64 billion. I think USDC might have passed that. I might be wrong on that, but per data from CoinMarketCap, USDC, stablecoin core creator, DM associated members, Coinbase comes in second with 27.5 billion. So yeah, my bad. I had them switched in my head. Um, Facebook has beat more established rivals before overcoming MySpace and Friendster to become the most pervasive social network on the planet. That's also given it a leg up when faced with innovators because it can just buy them as it did with Instagram and WhatsApp, or incorporate similar features into its own network as it's doing with the cryptocurrency. So there's room yet for Navi. There's room yet for Navi and DM to be relevant, and Marcus laid out the game plan today. We're a challenger in the payment industry. We will offer free person-to-person payments domestically and internationally for people using the Navi wallet, he wrote. We trust that people will prefer a service that is cost-free and more convenient to ones that are significantly more expensive and not consumer-centric. Maybe so, but if there's one thing Marcus and Facebook should have learned about cryptocurrency in the last 2 years, it's that it's not about trust, it's about trustlessness. And I personally agree with that statement when it comes to to Facebook. I mean, in all reality, I think they're personally still going to end up being behind the mark. For the people that end up getting with Facebook's wallet, I think honestly what will probably end up happening down the road is you will see some kind of fees being incurred somewhere. But I think during the launch, maybe in the first year or so, then perhaps then we would start to incur fees. But the reality that they say down here at the bottom of their at this article is that they want to be decent, or that they want to be, where is it, sorry, uh we we trust that people prefer a service that is cost free and more convenient to ones that are significantly more expensive and not consumer centric. And like I was saying, in the reality of it, I don't think that Facebook is really consumer centric. I think they're more about using their consumers to make money. So I think when it comes to this wallet, I think it's going to have some mixed reviews just because of how people feel about Facebook as it is. And then the people who are still all about Facebook, obviously, they'll probably be pouring into it if they're in crypto as well. But I think, honestly, for the most part, people that are involved with crypto generally aren't as involved with Facebook, or they're just not involved with Facebook whatsoever. And the reason why I say that is because of all the controversy that has happened with Facebook over the years, and people have essentially lost their faith in that. They don't want to be with a part of a company that is going to use their information without their permission in a manner that people are not basically generally okay with, right? Moving on into our next subject, it will be Bitcoin Lightning. So it says the Bitcoin Lightning network growth passes new milestones. However, only 58% of the nodes are operating channels and earning yield. The Lightning Network, a layer 2 payment product built on top of the Bitcoin blockchain that enables secure, private, and near instantaneous transactions at little to no cost, has surpassed 25,000 active nodes for the first time, an indication that the network is growing stronger with more nodes and more channels. During the past 30 days, the number of active nodes has risen 8% to 25,010. A node is essentially a user on the network who sets up a computer to interact with other nodes. That way they can send, verify, and receive information, in this case, Bitcoin. A decentralized network. As a decentralized network, the Lightning Network has no central data server that stores all of the transactions or interactions between users. Instead, it's a decentralized network of distributed nodes that keeps track of the data or parts of it. And in order to reduce congestion on the Bitcoin blockchain, the Lightning Network allows users to route their transactions through the off-chain channels. All of the transactions that pass through a channel are rewritten into single transactions and settled on the Bitcoin network, allowing millions of transactions to be made in a matter of seconds. These channels run between various nodes that have chosen to connect this way. Not every node, however, operates a channel. Currently, a number of nodes with channels is 14,419, about 58% of all of the nodes. The remaining 42% are simply there for the time being at least. But for those who do choose to operate and fund a Lightning Network channel, there is the potential to earn yield. Earning yield on the Lightning Network. In order to open a channel, node operators have to fund it with a small amount of BTC. Right now, the average funding amount is about 0.03 BTC. Whatever amount is in that channel represents the maximum value of any transaction that can be routed through that channel. In return for providing the channel liquidity, node operators collect a small fee with a transaction routes through one of their channels. In the Lightning Network, not every node is connected to every other node. That would require far too much storage per node. Usually, a transaction has to hop through channels from one node to the next in order to find a path to its final destination. To accomplish that, the Lightning Network uses onion routing from the Tor network, a privacy-based network protected by encryption, which essentially allows a transaction to hop from node to node until it reaches its target. Each hop through a channel requires its own fee, so the fewer the hops, the better. Currently, the average hop distance is about 8.8 hops. Since we last reported on July 15th, the number of channels has increased to 65,739 and has expanded the capacity roughly to 78%, from 1,800 to over 2,300 BTC, according to data from 1ML. And then here you can see the Bitcoin Lightning Network capacity, and you can see I assume this is, this is where they are at the beginning of June. So the increase in the number of channels means that there are more connections between the nodes. Since every jump between the nodes costs a fee, having more channels available increases the chances of finding more efficient routes for the transaction's final destination. Thus, increased connectivity can greatly reduce the fees associated with sending the transaction. Greater connectivity and more channels also translate to more competition in facilitating transactions. Average fees have dropped below the base fee, although the base fee for passing through a node's channels is 1 sat. The medium fee that is charged is only 0.00006 sat spent, or lots of zeros 3018 sats spent. A sat is a satoshi, the smallest unit of Bitcoin. Furthermore, the network capacity signifies a more developed network because it means that cumulatively, users have invested in the network. In order for transactions to hop from node to node, each channel must be funded adequately. The higher the capacity, the more funds can be sent. And then finally, driving forces. The growth is in part due to the increasing need for solutions to Bitcoin's scalability problem, which states that Bitcoin is limited only to 7 transactions per second on the base layer. Layered networks like Lightning and sidechains like Liquid have gotten the attention of big names in crypto like Twitter and Square. CEO Jack Dorsey, whose Twitter username now includes the Lightning Bolt for the Lightning Network. Earlier this summer, the Lightning Network made headlines when Jack Mallers, CEO of payments company Strike, announced the adoption of Bitcoin as a legal tender in El Salvador in partnership with the El Salvador President Nayib Bukele. I'm sure I still messed up his name. Muller's Lightning-based payment app Strike was implemented throughout the country. Now Muller is taking an aggressive stance against big centralized exchanges like Coinbase by bringing on an app Bitcoin purchase fees to near zero. All of these big moves signify his dedication to fostering the growth of Bitcoin as well as bringing attention to Strike and Lightning. So, I mean, it seems like the more that these projects work on what they're working on, we're going to end up seeing them, progress slowly but surely, irregardless. That's just what's going to happen. Plain and simple. These people aren't going to give up, and with that means that they're they're more than willing to continue to try and pour everything into it that they can. I mean, that's what I would say, generally speaking, is what a lot of these people are doing. They're pouring their entire lives into this. Moving into the next subject, which would be kind of counter towards the last subject about Bitcoin, Quant, Arweave, and Avalanche soar while Bitcoin searches for support. Bitcoin's price is losing its bullish momentum, but this did little to stop Quant, Arweave, and Avalanche from notching double-digit gains today. The cryptocurrency market once again entered a period of uncertainty on August 18th as the price of Bitcoin struggled to find momentum below 46,000 and large cap altcoins pulled back slightly. Several projects did manage to buck the trend and post double-digit gains thanks to cross-chain integrations and protocol upgrades that excited their respective communities and provided traders with low-fee Ethereum network alternatives. Data from Cointelegraph Markets Pro and TradingView shows the biggest gainers over the past 24 hours were Quant, Arweave, and Avalanche. Arweave's AR token has been one of the top performing coins over the past week, with activity on the decentralized storage network continuing to set new record highs on daily transaction. Vortex data from the Cointelegraph Markets Pro began to detect a bullish outlook for AR on August 14th. Quant rallies 33%. The enterprise-focused Quant protocol specializes in facilitating interoperability across separate blockchain networks. On August 18th, the Quant token posted its second largest gain according to the data. And then here is a picture of that, even though it's rather poor. The momentum for the project has been on the uptrend since the formation of the Quant Developer Program, designed to help attract new developers to the project's ecosystem. Avalanche integrates with Aave and Curve. Avalanche is a layer 1 blockchain protocol that claims to be the fastest smart contracts platform in the blockchain industry as measured by time to finality. The project also boasts having the most validators securing its activity of any proof of stake protocol. And then we can see it had a low. We can see it was falling to a low of 21.44 early on August 18th today, and then surged to 28.47 in its 24-hour trading volume, spiked by 50% to 1 billion. The project received a boost on August 18th following the announcement that Avalanche has partnered with Aave and Curve to create a $180 million liquidity mining incentive program called Aave Rush. According to the announcement, the goal of the program is to bring blue chip DeFi applications to Avalanche, starting with two popular protocols, Aave and Curve. Overall, the cryptocurrency market capitalization now stands at 1.9 trillion. Bitcoin's dominance is at 43.9%. So, even though Bitcoin might be having some issues, that doesn't mean that other coins, whether they're large cap alt, mid cap, or even small cap, that doesn't mean necessarily that they have to trend the same. Moving forward, Bitcoin Mixer CEO pleads guilty to dark web money laundering. The guilty plea from the Helix CEO underscores how law enforcement regards Bitcoin mixers as inherently criminal. In brief, the defendant Larry Harmon had planned to argue his Helix Bitcoin mixer was a private service. Harlan pled guilty to conspiring to launder money on sites like Alphabay. Ohio man Larry Harmon spent years running a Bitcoin mixer, a service that scrambles the origin of the cryptocurrency transactions in a way that makes them hard for law enforcement to trace, which led to his arrest in 2017 on the charges that included conspiracy to commit money laundering. After fighting the case for years, Harmon pled guilty to the money laundering charges on Wednesday morning in the federal court in Washington, D.C. The plea came on the cusp on a trial in which Harmon was prepared to argue that his mixing service, known as Helix, was not a money laundering tool, but rather a means to increase privacy and facilitate the use of Bitcoin. His decision to plead guilty suggests his privacy arguments were likely to fail in the face of the government's evidence that Helix primarily served dark websites like the now shuttered Alphabay, which served as a marketplace to buy illicit drugs and host other illegal services. During his time working with Alphabay, Helix laundered roughly 354,000 Bitcoin, around $300 million at that time. But that would be at the present amount to billions of dollars. The sole purpose of Harmon's operation was to conceal criminal transactions from law enforcement on the darknet, and because of our growing expertise in the area, he could not make good on that promise, said Don Fort, chief of the IRS criminal investigation. Harmon's decision to plead guilty underscores how law enforcement has come to regard crypto mixers, also known as tumblers, as inherently criminal, even if some people use them for legitimate purposes. The Justice Department has yet to reveal details of Harmon's plea argument, including whether the amount of prison term he will serve. In such agreements, defendants often agree to share details of criminal operations with law enforcement in order to reduce the length of their sentence. According to court records, Harmon is only pleading guilty to the count of conspiracy to commit laundering under the deal. The Justice Department appears to have dropped the other charges, which are related to operating an unlicensed money transmitter. In addition to the criminal charges, Harun has also been subject to a $60 million civil penalty from FinCEN, the Treasury Department agency charged with policing money laundering. So even if he does get out of this, whoo boy, I sure hope that he's got 60 million laying around to be able to, pay that off real quick, even if he doesn't go to jail. I'm just saying, you know what I mean? Because it sounds like he's probably gonna end up serving some kind of time, some shape or form. I'm not sure, but considering that they're trying to find him 60 million, I highly doubt that he's going to be able to walk out. Moving on into the last main subject, and I'm sure I'll botch this name quite a bit, so we'll just go ahead and get it out of the way. But Van Eck adds to ETF applications with Ether futures filing. The Ethereum Strategy ETF would invest in ETH futures contracts and an array of other indirect Ether products. Fund manager Van Eck filed for an Ethereum-based exchange-traded fund ETF on Wednesday that would seek to sidestep U.S. regulators' crypto ETF blockade by trading Ether indirectly. The Ethereum Strategy ETF would invest in Ether futures contracts, Canada's approved Ether ETFs, private Ether funds, and exchange-traded products with exposure to Ether. What it won't do is buy the digital asset itself, according to a filing. Van Eck already has a pure play Ether ETF before the SEC, but that product's fate remains unclear and is unlikely tied to that of over a dozen Bitcoin ETF bids, also before the crypto cautious securities regulator. By contrast, indirect Ether ETF is a 40 Act fund. That ETF structure is likely carries more investor protections than its 33 Act counterpart, and important distinctions for the SEC chair Gary Gensler. Earlier this month, DC's self-appointed crypto cop hinted that the SEC could look more favorably upon Bitcoin ETFs that only trade futures contracts. He did not commit more broadly on crypto ETFs. Ether and Bitcoin are the only two crypto assets approved for futures tradings in the United States. That Van Eck's proposed fund would trade a broad array of Ether products might fall outside of Gensler's guardrails. The company has also filed a similar fund that would invest indirectly in Bitcoin alongside its direct Bitcoin ETF application. So Van Eck is essentially trying to play all the fields right now. They're trying to make sure that, if one fails, maybe this one will pass, so that way they can get that in, because these institutions, they want to get involved with cryptocurrency. They want to get involved with Bitcoin, Ethereum. Some of them want to get involved with ADA, Dogecoin, and some of the other coins that, some of the Bitcoin and Ether maxis might lose their minds over, but it is what it is. Other than that, we'll go ahead and we will move into the final part of the show, we'll go ahead and check out coin market cap. Bitcoin currently sitting at 45,123. Ethereum sitting at 3,045. Cardano at $2.16. Binance at 404. XRP at $1.16. Dogecoin at 30 cents.9. Polkadot at 24.46. Solana at 73.27. And then we'll go ahead and check out. Well, actually, you know what? Let's go ahead and see who the other tops are for today. So we got, as we already said earlier, Avalanche and Arweave, but we also have Terra. Luna is up 33% today, 90% for the week. Cosmos is up 26%, 33% for the week. Near is up 21%. Phantom is up 18%. Audius is up 14%. Zenfin is up 12%. Elrond is up almost 12%. Internet Computers is up a little over 11.5%. Our winners for today on just Binance smart contracts, we have Avalanche, Cosmos, and Near Protocol with 21%. Prometheus 20%, 10% gain for the week. Coin 98 is at a 19% gain, 52%. Duo. I'm not sure on that one. They're up 11%. Swipe is up 9%. Linear is up 9%. Chromia is up 8%. IoTex, they're up 7%. Unfortunately, they're down 41% for the week, but might be a good buying opportunity, so it might be something you would want to look into. And we'll check the DeFi space real quick, see who the top winners are in specifically DeFi. So we got Lido DAO token. They're up 40% for today. Serum's up 25%, 55% for the past 7 days. Perpetual's up 23%, 13%. Radium, they're up 14%, 76% for the week. Bonfida up 13.7%, 54% for the week. Mirror Protocol is up 13.27 and 22% for the week. Ocean Protocol is glitched. Secret is up 9% and Telor is up 9% as well. So, if you like getting your news every other day, keeping you up to date when we are on, make sure to smash that like button. Make sure to hit the subscribe button. Share it with your friends. If you're interested in coming onto the show to talk to us about either your project or just crypto in general, feel free to hit us up at Crypto ITV, and we will link up with you there. Other than that, all of y'all have a great one, and we'll see you next time. Crypto Invest is out.